Hi everybody, my name is Hemant and I will just like all of us to introduce ourselves. So starting with...
Hi everybody, is that okay? So my name is Ned Phillips. I was the CEO and founder of Bambu, which is a B2B Robo advisor based in Singapore. I've been in Asia for about 27 years, been in fintech, well, it wasn't called fintech back then, but I used to work for E-Trade from the late 90s and ended up running E-Trade across Asia. So I come from a kind of a digital finance online broking background. But in the last couple of years, I've seen that the robo advisory or the savings and investment side has obviously grown enormously. So Bambu is a B2B platform looking to partner up with anybody who's interested in that savings and investment space.
Thanks. My name is Bert-Jan from Essen, and I'm the founder of a company called Dragon Wealth. And Dragon Wealth actually helps financial advisors to set the step into the digital age by engaging better with their clients, generating leads online, and getting a 360-degree view of their clients so that they can actually sell better to their clients. So we help them to get more of a, not like a robo advisor, but I would call it a bionic advisor, a bit robo and a bit of themselves. My background is I'm 8 years here in Singapore. I started in 1999 in e-finance, as they used to call it at that time. I have a company called eLoan, still existing in the States. And after that, I became the CIO for Credit Suisse Private Banking in the region, and now I'm running my own company, as I said, Dragon Wealth.
Hi everyone, my name is Bhaskar. I'm the founder and CEO of WeInvest. We have two products, TrackWealth, which is an aggregation tool for you to aggregate all your bank accounts, brokerage accounts, and wealth accounts, and get a kind of complete consolidated picture of your financial life. Along with that, we're just launching WeInvest Robo Advisory Platform, which is a B2B2C service, which enables banks, IFAs, wealth managers, and insurance firms to launch a robo solution, be it a hybrid solution or a DIY solution. From a background perspective, been 15 years in the finance vertical, both from starting off at the bank and then consulting into banks and asset managers and capital markets institutions about transforming typical old school brick and mortar kind of divisions into more e-enabled kind of businesses.
Hi, my name is Keir. I'm the CEO and co-founder of Smartly. We're a full robo-advisory platform for P2C. We've had the product ready since July, still waiting for the last approvals from the MAS to actually launch our product. And since we've had quite a lot of time in the meantime waiting for the license, we have started to move into P2B model, so we can actually let financial advisors start using our technology to better serve their clients. So we're moving in that direction as well. But mostly we're waiting for the launch, and we hope to be the first ones to launch their product for P2C in Singapore. And maybe for the last thing, we are a platform without no middlemen, so everything is built by us. So everything is managed by us, built by us, and we really try to be fully transparent, a P2C platform for the retail clients.
Cool. So one thing I noticed is that there is no robo broker on the panel. So the panel should be called Robo Advisors and Bionic Advisors, as you just mentioned. We all have had lunch, so let's make it a bit more lively. How many of you have heard of robo advisors before this discussion? That's pretty good. How many of you had used robo advisors? 1, 2, 3, 4. Is that it? Wow. So guys, yes. So let's start from there. 4 people out of probably 100 who have used this. When do you think this is changing? When do you think the landscape changing and more people coming to really use it, not just hearing it?
Well, I'm afraid Arthur doesn't count because he's probably used Smartly. So we can say 3. No, he counts. You know, it's interesting. I think that perhaps the word, whether it's robo-broker or robo-advisory or bionic advisory, sometimes it doesn't always convey what it is. Because if I said to you, how many of you have made investments or savings in a digital format? It's probably more than 4 of you, right? And that's where I think some of the crossover is coming, is that when an industry gets a new terminology, people expect that, you know, it makes fundamental changes. Where I think what robo-advisory is really doing, and we won't see that sudden people not using it to everybody using it, it's the realization that I think in the financial industry, we've done a bad job so far about usability, about products, about how we let people access them. And that's what I really see. I really see that there's really no, whatever the terminology for it is, there's no doubt that we can improve in this industry in how we serve our clients. We can do a better job, in terms of how we onboard clients, how we offer products, what we offer to them. And the biggest reason that I think this will happen is that people not in our space, not in the financial space, will move into Robo. The consumer brands, I know we're going to talk about that later, but the consumer brands, the internet brands, anybody who has a large customer base, they will then move into it, and then we'll see that everybody else comes in. So I think it's already happening. We see, and I think we were talking about this earlier, the amount of demand that we all see, whether it's B2B or B2C, shows that the market's there. We all have challenges, to work on in terms of the product and how we use it. But I actually think it's already bigger than perhaps, and if you look in America, whether it's Vanguard or Schwab or other players, and yes, Asia is catching up, but then if you included China in Asia and what they've done with Robo already, I think you can already say it's here, but we're still at the very beginning.
Yeah, I believe that you're completely right, and I see that the change towards Robo or Bionic or virtual advisor is driven basically by the changing client demand. So clients are actually just at the moment being sick of being pushed only products based on partial truth information, and basically the financial advisor not really understanding, and specifically here in Asia, not really understanding the complete need of the client. And I believe, let's say, that digital platforms, being it a Robo or being it a platform like Dragon Wealth, are really more focused around getting that 360-degree view of what the client needs and what his, let's say, his assets are and what his liabilities are and what his insurances are. And based on that, helping the client or the financial advisor who helps the client to give a better advice. So I think that you will probably not see so dramatic in your face everywhere a Robo. It will be as well that you purchase something which is backed up by Robo capability in the end.
Okay. Add something?
Yeah. Cool. While I echo some of the sentiments there, I think Singapore in particular is going to see a huge slew of robo-advisory solutions in the next 6 to 12 months. Already, I think we can see at least 6 of them coming up within the next 8 months. Some direct B2C ones, some which are launched by external asset managers, some which are going to be actually a bank-led offering. So there's going to be a whole spate of them in Singapore for sure. But then it's still a small market. How does, for example, rest of Southeast Asia effectively pan out? I think that's where there's still going to be a lot more growth, which is going to happen maybe over the next 3 to 5 years. But everyone in the region, be it Malaysia, be it Indonesia, be it Philippines, be it Thailand, Korea, Taiwan, Hong Kong, there's a huge spate of interest. It is going to take time. It's not going to be like the US story of a Wealthfront and a Betterment and 2 large B2C brands, I think, which are going to make it really big. I think there's going to be a huge slew of existing brands, be it banks or even IFA or insurance providers who are effectively going to lead the charge because they've seen what's done in both US and the European markets, and the fact there's now the whole hybrid model, which if you look at it has actually seen much bigger growth rates. Like Vanguard launched its hybrid robo-advisor, which is actually a assisted model, and saw $30 billion flow in over 1.5 years, while the two direct B2C ventures in Wealthfront and Betterment have taken over 7 or 8 years to get to around $5 billion each. So there's huge, immense potential based on the existing inefficiencies. And so I guess about some of those leading financial institutions, be them banks or insurance providers, who are effectively going to take charge in certain unique demographic or geographies of theirs and kind of lead the revolution.
Yeah, maybe for the last thing I would add, we have close to 2,000 signups today on our platform, and people actually, the reason why they know about robo-advisor is thanks to Betterment and Wealthfront from the US. Passive investing, ETFs, robo-advisors, these people have Googled it, they have the information, and they want to use these services on their markets like Singapore. but they have no access to any of these platforms. I truly believe that each and every market that Bhaskar mentioned, you're going to have one or two P2C robos that are fully transparent and without middlemen, really offering buy and hold platforms. And then you will start seeing more hybrid approaches on the market who go into niches and try to offer something extra. We'll see, but I think we will definitely see fully transparent P2C platforms on the market.
Cool. So you two, and then you have in some ways mentioned about improved customer experience and products not being pushed out. Do you see any change in distribution model as well as robo-advisors become more and more popular? Let's start from the other side this time.
I think robo-advisory platforms are excellent places to distribute your products. For ETFs, Vanguard, BlackRock, all the robo-advisors are using similar ETFs today. There's no doubt about it. Low expense ratios, globally diversified, so on. So it's really similar. But as soon as you start offering, let's say, a robo-advisory platform for financial advisors, you have to start putting in different products, more ETFs that they can use. They can offer more active approaches to their clients. So definitely, but I think robos are excellent places to actually distribute your products because you have a really good outreach to clients.
How does it play in terms of what we were discussing today and yesterday of agents, human agents? So how does that pan out?
Right. See, the basic promise, if anyone's gone through the whole robo journey, is the fact that there's cost and therefore better performance. There is transparency and there's much better ease of use of the whole service. Since it's completely online and no paper transactions or no having to go in and meet someone. While all these are very solid benefits and effectively have seen huge amount of interest, there is this whole aspect of wanting to trust someone, which has always been a resistance factor for people to think that digital solutions like this are not going to take off. But then you have the whole hybrid model, which is effectively and every single bank or insurance provider we've spoken to or IFA, while they want to launch a direct B2C venture or a platform to do this, they're extremely cognizant of their existing agency workforce or their existing RMs, and therefore don't want to completely shut out that as a channel, and are saying the fact that, hey, if we have a much more efficient infrastructure from a front to back perspective to execute, and effectively with more efficient products like ETFs, can an RM effectively sit, or can an agent sit with a user and walk them through the process and effectively offer a service at 1/3 the cost of what it used to be offered at? And is that good enough? Yeah, I mean, you could have a direct B2C venture which is maybe offering a portfolio at, let's say, 0.5%, and maybe an RM-assisted one at 0.75%, and maybe the person who still needs that handholding wouldn't mind paying that extra 25 basis points. So I think existing channels will also have to adapt, and I think a lot of the institutions are already thinking the fact that it's not just going to be a direct B2C venture, which is what robo-advisory originally has been thought about, because they're all very cognizant of this has been our bread and butter channel. Agents, RMs, IFAs sitting with customers, and whether you call it the fact that Asia loves high touch or the fact that there's a trust coefficient which people still want to rely on, I don't think those channels are going to disappear. It's just the fact that they'll get more efficient and have newer, better offerings to launch.
Well, there might be, Bhaskar, there might be a bit of a change going on, I believe, because the financial services industry and people who are financial advisors in Asia, in Singapore, they don't have a great reputation. And there is a kind of a mismatch between what the clients at the moment want and how the insurance or the financial advisor sees himself. So I believe over the next couple of years there will be a change where the financial advisor, the insurance advisor, needs to take a more holistic view, needs to get paid on a basis of a yearly advisory fee instead of, let's say, a kickback on the commission that he gets, to be able to win the hearts and the minds back of his client base. And I believe, let's say, that the only way that he can start doing that, or she can start doing that, is by being backed up by a transparent platform, being it a Robo, being it whatever kind of digital platform that actually shows the value that they deliver to their clients.
I suppose on distribution, I've got maybe it's just a slightly different take on it. I think where you should maybe look at this is try to partner up with companies who have customers. So what I mean by that is, just to give you an example, I don't know if you all saw recently that Uber did a deal with Betterment and in the States, which allowed their drivers, the Betterment drivers, who Uber perhaps thought are maybe not the most financially literate people, to go direct to Betterment and say take 10% of their earnings and go direct into a savings product. Very simple, very straightforward, huge reach for Betterment. Was able, and the driver, for every $10 they get from a customer, $1 goes direct to a portfolio. And what I can see is that financial companies will start to team up with these people who have real distribution. Here in Asia, Korea Telecom just received a banking license. They then went out and brought Hyundai Securities. And while they haven't done the next step, it's pretty obvious what the next step will be. They will offer investments, savings, insurance products, and I think they have about 15 million customers. There's already a telco in Indonesia. So I see from a distribution point of view, I think as Bert said, perhaps the industry's, not all of it has the best reputation, but what you see is that people with these huge customer bases have that trust already. And then you can sell your products using the robo-advisor, robo-broker, whatever you want to call it, and you can integrate and use that through these people who have those huge customer bases as well. And I think that's where it's going to go.
Three of you mentioned something about trust coefficient, Bhaskar. You mentioned about the trust and high touch. So let's just do a quick survey here. How many of you are happy with your current advisors? 1, 2. Wow, okay. And how many of you are super unhappy with your advisors? Okay, so that's okay. That's a good question.
How many are advisors?
Right. So I was reading an article today morning, and it said that the millennial generation, the ones who were born after 80, they have seen only financial meltdown one after the other. They have seen a couple of banks going down under. They have lost their jobs to these same banks, and they lost their savings at the same time. But there's only one thing that has kept very nice for them, and that is technology. So there's a high trust on tech, and I think you kind of touched upon that. That's why people from Uber are like Uber drivers are just going for that. And there is a very low trust for financial companies. So maybe robo-advisors in one way can combine the two and bring it together. Okay, so let's just pause for a second. Conscious of time, does anybody here have a burning question? Otherwise, we'll keep on carrying on discussion. Okay, let's take a question from the audience.
Okay, I believe that the first friction point is when customer get on board. So in order to AI can work its magic, the customer needs to tell the advisor something about them, right? What do they have, current portfolio or something like that. So in the US, there's something like a common API or Yodlee who provides these kinds of information. But in the market that you are operating in, does that something like that exist, or how do you deal with it? You get customer to enter a key in all the information, or you partner with an institution?
I think you hit the nail on the head. I mean, I think so much of fintech, not just the area that we're in, is about that digital KYC, that ability to do that. I think, in a market in most of Asia, it's not really that usable. I think China's the best example where it is. One of the ways to do it, and I think I think out here, if you look in Singapore, I don't think there's any easy answer yet. What's coming, my guess would be in the next 6 to 12 months, that will be accessible to the market, and I can see that there's different ways of doing it. For example, one of the ways that we're working on, we're close to doing, is instead of physically meeting somebody, is doing a Skype. You can then record it. So you can then show that you met that person because you have a recording of the Skype. Stuff like that. It's pretty simple. It's not high tech, but it works. So I think it will slowly come. I don't think the market here has all the answers yet, but I think more and more people are coming up with solutions to make it work. And that will drive the regulations in the market forward. But yeah, it's still an issue, I think, and I agree. It's the digital KYC is the biggest issue.
Kind of directly relate to what we have. Right? So we have two solutions. TrackWealth effectively is launched and we effectively help aggregate all your different bank accounts, brokerage accounts, with a very clear idea of the fact that you should be able to get a complete understanding of what you have. We've not integrated into the robo-advisor, but that's part of the roadmap. But that's also going to be as a service to other robo-advisors who want to first understand what a customer has, what's their actual risk profile based on their actual transactions and what they hold, rather than just through a questionnaire-based risk profiling. Because you tend to effectively perceive yourself slightly differently in terms of what you would take as a risk and return expectations versus actually answering questionnaires. So, yeah, so we've launched that service just about a month ago.
I think it's a good time to segue into the artificial intelligence part. So, how does onboarding experience come with technology? Do you think artificial intelligence can help in that side as well? And or how does AI in general help in this specific fields? Let's start from Keir.
Yeah, it's an interesting question. Every time I answer this question, I go back and think, who are the companies today who are developing AI? I think these are the best scientists in the world, and they're still having trouble really figuring out how to implement that. And for a startup or for a robo-advisory platform, tell that they use AI and they're really good at it, I think it's really unlikely. Today, to develop AI or machine learning, you need a lot of data. We have some, but definitely it's not enough to really develop some machine learning chatbot or AI technology. But of course, there are ways you can implement that maybe in the investment methodology that you use, but to onboard clients through AI, I think it's extremely complicated. Today, you would still have to go through the digital KYC. You have to do it. You have to track their bank accounts, so on, where the money comes in, where it goes out. So you have to check all that. But definitely the world is moving in that direction. And when we are talking about robo-advisors, then it's really simple. They are buy and hold platforms today. It's really simple. You buy, you know your fees, you know how well your portfolio is diversified, and you have the full transparency to add money or take money away. So I don't think you can really put AI on top of that and make it better, right? So this is my view on AI and robo-advisors today.
I see AI in terms of two levels of maturity. There's, for example, chatbots which have started coming up. And for example, Shankar from Active Intelligence in Singapore, they've been working on a number of use cases which are very retail banking or transaction enabling oriented. So can you tell me what my balance is today in this bank account? Or can you help me transfer $500 to so and so?
There's a startup from SBC Bootcamp who's doing the same.
So that's one, what I call base level. The next level is where effectively we hope to take TrackWell to, where we're saying, once I understand your transactions and your behavior in terms of how much you're spending and how you're investing, the fact that we actually give you social feedback saying, hey, you know what, you're maybe holding a lot more cash than, which is, let's say, 8 months of your monthly expenses as cash versus typical families in this space. Given your outlay or your past 3 months of expenses, what are you doing this? Why are you doing this? At least from a thought-provoking perspective. The next phase would be actually to integrate, let's say, a robo-advisory portfolio towards, let's say, a child education. Once you start seeing transactions coming in about nappies being bought and childcare stuff, and then saying, do you want to really plan for this child's education in 15 years from now? And this is the track record. So there's a lot which can start coming up over the next 5 to 6 years. But I think, as Keir was saying, data is key for the next level of the maturity of these solutions.
I think that's a very good point. Data is key. Somebody else today mentioned that a lot of companies have a lot of data, but they don't know what to do with the data. So that takes me to the next question, if I may. How do you feel the charge of the big players like Tencent and Alibaba's, they started Ant Financial, they started WeChat transfers. How do you feel the charge of the big tech giants moving into finance, and how is that going to impact this world where we are sitting today?
Yeah, I think that is, so we had a pre-discussion about these questions, and first of all, we were discussing about, let's say, Google and Facebook, but the discussion came directly about these Chinese giants who are moving into the fintech world. And I believe that, so I've seen basically a bank in China, I've been talking to a bank in China who is using for their wealth management, they're using WeChat. And the way that they're doing that is it's unbelievable. It's with a question and answer system over WeChat. And I believe, let's say, that the ways that they are addressing that with a super high client engagement, with a super high prospect engagement, they are actually targeting their clients in a very, very sophisticated way. And I believe, let's say, that their progress into the fintech as well as in the traditional incumbent banking world will be very fast and very high. And basically the core item that they drive is making sure that people get glued to that little device and keep on answering these questions. And that is how they get a 360-degree view of the client that they're advising.
Yeah, I totally agree. I mean, I think if you look at these guys, what Alipay and Ant have done, it's extraordinary because they don't come at it from a finance point of view to start with. From what I've seen, is that they understand that they know the client journey. And yeah, I think certainly in this part of the world, I think as each of these come into each market, because remember, I mean, the thing, and part of, if you want to come to the show and tell later what we're doing, is I really believe you connect it. So if Alibaba encourage people to save money, because they're selling them stuff, right? And they know what they're buying. If you know what they're buying, you know what they need to save. That's all the AI, not all the AI that you need, but they have that from their natural point. So, and look, just very quickly on the previous question on the AI, we try to look at it in the simplest way possible. We're trying to incorporate, and we are by no means experts in AI, but one bit that you would all understand is that right now you do a risk questionnaire for people, right? And you take their risk questionnaire, you put it on a piece of paper and you put it in the drawer, right? And then you look every couple of years. Of course, people change. So when we were talking about devising it, our idea was you ask some very, very simple questions, but the reality is if somebody tells you they're high risk and they keep clicking, you give them news stories and they keep clicking the US Treasury stories every single time, you tell them that they're not. Is that AI? It's not that clever, but it is machine learning or artificial intelligence. Some guy tells you he's low risk and only reads the private equity stories and the VC stories and the tech stories. You tell him that you're not. I think that at the very simplest level, AI always seems to be that it has to be the cleverest thing on the street. In my view, it doesn't. You could all do AI incredibly quickly by just taking the smallest bit of data. Of course, the big tech giants from China have all the data, so they can do it better than the rest.
Okay, last 3 minutes. Questions? Yes.
Yes, the concept of AI is to learn and to change as you go. So you used to know you don't need data by itself, you need feedback, okay? And if the Robo broker or advisor gave a bad advice, you need the feedback from the client who took that advice and put it in the dictionary so it can learn. But is that what's happening, or the?
No, I think we're way far away from that. I think we're starting at building an infrastructure first of being able to first understand how people react and then collect that data in terms of what are their reaction mechanisms. Like we call it a questionnaire, call it in terms of preferred choices and showing them more visual and better UX or user experience based stuff. And then start building those personality. Today, be it whether you call it MAS guidelines or your kind of risk and compliance, we're talking about 5 basic risk profiles. That's basically what you've kind of been mandated. But you actually have almost like a continuum, and you have to effectively start building that data and to be able to get it. But the problem today is the fact that be it insurance companies, be it banks, unless you're connected to be able to get a lot of this data, to be able to absorb data from multiple sources, be it people's Facebook profiles, people's Uber usage, and have your own APIs to kind of expose it to multiple people because it is to be a shared economy, how do you really learn about someone completely? Or else you only see what they do with you. And that's the siloed view, which is where an Alibaba or a Tencent, who's maybe much more technologically open to kind of get connected and receive kind of data, will have an edge.
In some time, very soon. I hope. Okay, last question before we have wrap up. Could you bring the mic, please?
Good question. So let's imagine that robo-advisors launch and thousands of people see that they can get great returns through an automated kind of service, right? Few minutes and it's done. So what will be then the argument of the wealth managers to kind of convince millennials like myself to kind of go to a wealth manager, set up an appointment, and do that instead?
I think you answered your own question. I think the reality is that they will interact to start with through the technology. I still think that the human advisors can give some after that, but if you ask what is the initial impetus for them to go in the first place, I think it decreases, but I do think that the human interaction later on is still needed.
Yeah, maybe if we talk about robos, then you don't put all of your money into robo advisory platform. So what you will see, like what we're doing, we're building a platform for financial advisors as well. So you can always pull more or have more active approach on your portfolio as well. So you can have 30 to 40% of your assets in a full passive approach, but then maybe 30% in an actively managed portfolio. And they can give you advice more precisely about your loans, your child, your house, your loans, everything from that. So you never want to fully go to passive. You can always have something in the actively managed fund.
Cool. So just, sure.
One last input, sorry. At the end of the day, the whole robot solution is basically trying to make it very, very simple and trying to make it relatable to your goals, right? Most of the robo journeys today are very goal-based journeys. There are some robo-advisors who have started doing very risk profile-based journeys. And there are others, for example, who started offering themes you want to invest in. For example, do you want to invest in a theme called kids, which is everything related to, kids' education, clothing, and everything else? Or do you want to invest in a theme called yummy, which is chocolates, snacks, and coffee, which is evergreen? So there's going to be a continuum of what I call niche offerings which will come in, which will almost kind of replicate the continuum of different kinds of wealth manager offerings, starting right from, let's say, a priority preferential banking or an IFA who offers you everything, to a high-end external asset manager / wealth manager who can get you access to hedge fund strategies and private banking. So there's that. You will see that replication happen over time in a digital format. And depending on your level of sophistication, you will end up having that digital alternative. So there will be a huge pull and push between which is the more efficient way, but I think technology is just going to make it so much more efficient that traditional folks are going to struggle to make the margins which they did.
Okay, so I see Nolan charging. Just wrap up in 10 seconds. So basically 3 messages that we want to give out. 1, customer still stays the king, probably better so than previous times. So we will push less products and it will be much more technology and behavior oriented. Number 2, the hybrid model is the best model because people still need touch. And I think finally, we are still a few years away, but we will get there soon. Thank you.